14.2. This is the most important number to remember when it comes to investing in the stock market. And once you understand it, you cannot lose money. Let's look at the S&P 500, or the US stock market, which is around 60% of the global stock market, and the rest of the developed world pretty much mirrors it. Since 1980, per calendar year, it has been up 75% of the time and only down 25% of the time. And the average intra-year decline, i.e. from the top point to the bottom, is 14.2%. But what does this mean? Okay, so in January, the stock market is at 10. Over the next couple of months, it drops to 8, but then the market picks up and finishes on 11. During that year, there's been a 20% intra-year decline, but it's irrelevant. You've made 10%. If you understand these numbers, you're in a position to be a successful long-term investor. So when you turn on the news tomorrow and hear that the stock market has retracted 11%, you can smile and say that's a great year, it's normally 14. They won't tell you this is like clockwork and it will bounce back. They'll just blame it on Brexit or Donald Trump and shock you with a headline. This is a fact and it's called volatility, i.e. the unpredictability of prices up and down across a long-term trend. The markets will, not can, but will go down as well as up over the short term. But over time, they can only ever go in one direction, and that is up. As decade after decade, this is proven. Don't let what you heard on the news this morning impact your decisions about money. It's noise, just shut it out. There's only ever two periods, a rising market and a sale. It really is that simple. Declines are temporary, the rise is permanent. I really hope you enjoyed the video. If you did, the biggest compliment you can give to me is to leave a comment and share. Your support really does mean the world. I'm Joe Woodhouse, this is Family Wealth 101, and we'll see you tomorrow.